What is going on, everybody? It is your boy Stas here. Welcome back to another video. So check it out. We have a lot going on this month in October. And by the way, happy October. Hope you guys had a great September and have an even better October. We have a lot going on, and we're going to break it down in this video. We're going to go over 10 stocks, all of which are reporting earnings, and we're going to go over what I'm doing in the markets, kind of what I've been buying as of late, and we have to break down the markets in general. So sit back, relax. If you all find value, hit that like button. Feel free to subscribe. And if you want some free money, use those links down below. You get 15 stocks for Moomoo, each up to $2,000. All you got to do is deposit at least $100 using that link. And you could also get 12 stocks from Webull with any amount deposited. All of those are linked down below. And with that being said, let's dive into the video. So you guys know the markets have been getting destroyed. Last week was not a good week, and especially on Friday. We did not have a good Friday at all. The S&P 500 went down 1.5%. The NASDAQ down 1.7%. The Dow down also about 1.7%, as the Russell, I think the Russell, I forget, it's not showing here, but best believe, guys, the Russell did not do well. So on Friday, we had a horrible day. In fact, the S&P 500 and Triple Q, which tracks the NASDAQ 100, both of these took the lows out from, well, the prior low, which was hit, I think, earlier last week. I think it was on Tuesday or Wednesday. SPY hit 358, 359 roughly. And look at what hit on Friday, 357. The descending triangle that we have outlined here is playing out. The bears are 100% in charge. And same thing on Triple Q. Let's pull it up. You guys can see here, we ended up taking out the lows from earlier last week. It hit 267. The descending triangle played out. That, mind you, we called it out before it ended up playing out, right, guys? And this is why you got to subscribe to the channel. We called it out. And by the looks of it, we might be going lower. I think we could be going lower here. And let me show you, where could we be going? Well, let me refresh your memory. We've talked about this before, but I'll mention it again on this video. So Triple Q, if you guys remember, before the COVID crash, the all-time high was right around 240. Ballpark number 240. Where are we now? We're at 267. And again, we took the lows out from June. At this point, the next gap on the downside is initially we got 260, roughly I'd say 260. Then if that were to break, we got a straight gap down to 240, wide open in my opinion. That's where I think this could be going if things get really, really ugly here in the next couple of weeks, maybe throughout the course of this month. And if I pull up SPY, let's see this. This is already pretty dang close to the low, or the highs rather, from before the COVID crash, which were right around 338 to about 340. Look at where it is now, 357, guys. If we have another couple of bad days just like that, we're going to be at 340. Now, if we do end up getting to 340, which would be crazy, I mean, that'd be a drop of about pretty much 20% in the span of, about a couple of weeks from where SPY peaked in the beginning of August. It hit 430, and now if it went straight to 340, again, that'd be about a 20% drop in 2 months, but it's possible. Now, if it were to get there, it would be in dire need, in my opinion, for a relief rally. So keep that in mind. I don't think it's going to go straight down with no relief rallies. I mean, we're probably, if we get down, even down to 350, 345 even, we're probably going to get some sort of snapback, maybe a 1 week rally or something like that. And I think historically the markets in September are not good at all. So you got to realize that we just had a horrible month of September, and I have to look at October, how the data looks for that, how the stock market has done historically in October. But I know pretty much for sure September, not a good month historically. October might be a better month. We got to look, we got to look at the data, and I'll probably, I'll recap you guys on that in another video, in an upcoming video. But keep that in mind. Relief rally, it's possible. Same thing on Triple Q. So those are some words on the overall markets. Nothing crazy. And in terms of the VIX, I mean, right now the VIX, which is the volatility index here, very important to track it. We're currently at the upper end of where it's been over the past, over 2 years at this point. So keep that in mind. The VIX is right around, the low 30s now. It did get to the mid 30s this past week, and it really hasn't gone much over 38, 37. It really hasn't gone over that, except for one time when we had that COVID crash where the VIX obviously got to about 85. So keep that in mind. We had a horrible September. We could go a little bit lower, sure, like I said, but I would not be surprised if we got some sort of relief rally, maybe later in October at some point. And we're gonna recap all this stuff, guys. We're gonna do follow-up videos, so make sure to subscribe and hit that like button. You might as well hit that like button if you all are finding value. So with that being said, let's get into the meat and potatoes of the video, guys. Let's talk about what's going on this month. Now, this week coming up, we actually don't have many big companies reporting. I think Tilray's reporting, some boring companies that nobody really cares about. But later in the month, and mind you, today's October 2nd, we're talking pretty much at the end of the month, we have big tech reporting. This is going to be big, big stuff. We have Apple, we have Amazon, Meta, Google, and Microsoft. Pretty much all of those are within a couple of days of each other at the end of this month. So let's get into this. We all knew or know Apple did not have a good week last week at all. It was a pretty bad week. We got news from a Bloomberg analyst that their demand for the new iPhone, it's not as good as expected. They're going to have to cut back production. They're telling suppliers that apparently, or what's the word here? Allegedly, right? We don't know exactly. We have to wait and see until Apple actually reports earnings, which is in a couple of months, or not months, weeks here, guys. I think it's on the 27th. Let me double check. 27th after the bell. So, yeah, we got hit with that news, which could be possible, could be 100% true for all we know, but we have to really wait and see what the earnings, what the numbers actually look like. And we also got some downgrades last week. I think actually, I don't think it was JP Morgan, but we got a couple of downgrades last week on Apple. Price cuts, I believe. Oh, it was B of A. That's right. B of A downgrade, maybe a couple of other ones, but that also sent the stock into shambles on Friday. It went down about 3%. So essentially, Apple last week, guys, lost. It was at $154 to start the week. Closed the week at about 138. That's an insane swing for Apple stock for a company of that magnitude. We're talking about 10.5%, 11%. It just got, well, I think it was already in correction territory, but just this week alone it dropped 10%. So, I mean, it's got to be in bear market territory now based on that last week drop. Let me double check. Yeah, we are officially 23% down from all-time highs here on Apple. So Apple, based on last week's drop, or, after last week's drop, it is in a bear market. So they report on the 27th. EPS is looking to be about $1.26, and these are all estimates that we're going to talk about today, guys. Average estimates based on 15, 20, 25 analysts, depending on, who's covering the stock, right? Or what stock it is, rather. So Apple EPS is looking to be about $1.26. Revenue's looking to be $88.8 billion, which, if it comes at that point, it'd be up about 6.5% year over year. So don't expect crazy revenue growth numbers from Apple. I don't think anybody really was expecting that. But 6%, 5, 6, 7%, it's going to be somewhere in there, of course, depending on what they actually report. So not that bad, I'd say. But obviously the growth is really slowing down here on Apple. They're going through some short-term pain. And at this point, they are just $8 away from the lows from the middle of June. We're talking percentage-wise, not that much. If this thing falls 4 or 5 more percentage points, which could be another bad week in the stock market, that could easily drag Apple down 4 or 5%. We're at those lows, and if we take those lows out, we're probably going to start going. Let's pull the 3-year up here. If 130 breaks realistically on Apple, 115 could be another target. That'd put it right by the 180 SMA here on the 3-year chart. In fact, that'd be a good spot for it to pull back to, honestly. If Apple were to somehow get towards $100, $105, $110, $115, that's where I'd buy or add a little bit more to my position. I already have Apple, and if you guys have been watching the channel, and I've mentioned this before, I mentioned it in real time, I trimmed Apple at 170 something bucks on this recent run up and where it peaked at the middle of August. I trimmed a little bit under that, I think 171, 172. And I told you guys I'm trimming. I'm not selling everything. I'm trimming a little bit, locking in some gains. And when I do that with stocks, I also like to add more to them. What I'm trying to say here is I'm not afraid to add more to it if it gets to an undervalued price. So what I'm trying to say without being too confusing is I'm not scared to buy a little bit more Apple if it gets to a price where, hey, maybe the P ratio comes to a 15 or something like that. I forget what it is now, but I don't think it's a 15. If it comes down to a reasonable price, I'd be willing to add more to it. And I don't really ever plan on selling all of Apple, at least right now. I mean, I always want to have some Apple stock. And I always say this, the way I do it is with a lot of my bigger individual stock holdings, I like to I trim a little bit, when they get frothy, I add a little bit when, I think they're at a decent price. You guys know what I'm talking about, right? So Apple, we have that one this month. Amazon's another one, big tech company. This one is right around 113 when I'm filming this video, and it's down 21% from the recent $145 high, which was just 50 days ago, guys, not that long ago. So it's deep in a bear market, I'd say. It could go down, more for sure. It's currently down 35% from all-time highs, and we are holding for dear life above this channel at the bottom of the channel. And if it breaks this point, that is where the selling could really start accelerating. So Amazon's earnings are on the 27th, same day as Apple. Their EPS is looking to be about 22 cents on revenue of $127.89 billion. So they're making a ton of money on the top line, guys. That'd be up 15% year over year, the revenue. So Amazon, hey, they're sitting pretty, guys. They're looking pretty good year over year on that revenue growth number. And again, the stock's down 35%. So I'm not saying Amazon is a screaming buy personally. I don't think it is quite yet, but I'm pulling it up here on my iPad as I'm talking to you all. But if it does get down to, let's say, $100, under $100, I'm going to have to start considering beefing up the Amazon position. I do have a little bit of Amazon, nothing crazy, a very small amount to be honest. But if it starts getting under 95, 90, I might have to start adding to that position or, making it a little bit bigger. So Amazon, not that bad, technically. But again, if it gives out here at 110, it's going to start moving down towards 100, and who knows, it might start getting to my sweet spot. So we also have Meta this month. Guys, we have Meta. Yeah, you heard that right. They report earnings on the 23rd, I think. 24th, that's right. 24th after the bell, and their EPS is looking to come in at about $1.94. Revenue is looking to be about $27.5 billion for Meta. So you all know, we're not going to get into it in this video, but they're going through some short-term struggles. Their whole situation with Apple, that lost them a ton of money. Of course, now they're investing heavily into the metaverse. A lot of people don't agree on that path. Maybe they're jumping ship. So there's a lot going on with Meta. Again, we're not going to dive too deep into it in this video, but this stock has just been obliterated. I think out of all the big tech names, this one is down the most by far, and I'm not talking about Netflix, excluding Netflix. Out of the 5 big tech names, Microsoft, Google, Meta, Amazon, Apple, Meta's down the most by far. And for me, I think it's the best value because of that. I mean, the numbers look pretty decent in my opinion, and that's why I've personally been buying it. This is a stock that I've been buying pretty much throughout the course of this year. I'd say more towards, it's really been more the second half of 2022. I've been buying heavier into Meta, and I'm just going to keep on buying down here, guys. I'm not going to overdo it and make it a massive position for me. I don't want it to be that big of a position, but I'm going to, within reason, I'm going to continue adding to it. So they're at the end of this month. We also have Google, which is my biggest individual stock holding. I love Google, and this is one that I'm buying more of right now as well. I'm adding to it because whenever I see Google, my rule of thumb is, not always, but I look at it as, okay, if the stock's down 20%, 25% from all-time highs, and I plan on holding the stock for 5, 10, 15 years, for sure 10, 15 years at least, right? I'm looking to dollar cost average onto, down moves like that. And here I feel like we've been blessed with Google. I wasn't buying much, in the 130s, 40s, 50s, and this is obviously post-split, but I was buying at about 110 a little bit as it was dipping down again every 20, 30%. If it comes down 20, 25, 30%, I like averaging in, right? Dollar cost averaging into stocks I love for the long term. And here we're down More than that, way more than that. We're pushing down 40% on Google. So you bet your you know what, I'm going to continue dollar cost averaging. So they report at the end of this month, they're looking to do $1.26 EPS on the 25th of October on revenue of $70.94 billion, which would be up about 9%. Not bad. 9% year over year. That is respectable, guys. I'll take it for this year. I wasn't expecting Google to grow 30% this year or 40% or anything crazy. I'll take 9-10% depending on what the revenue does end up coming in at. So Google, I think it's a screaming buy right now, in my personal opinion, especially in the low 90s. And if it breaks 90 somehow, guys, goes into the 80s, I'm going to be buying a lot of Google. Let's just put it that way. I'm going to be buying a lot of Google. So we also have Microsoft this month, and I feel like we're going really slow in this video. My bad, guys. If you're still here, we're about 18, 19 minutes in. I'm probably going to edit it down a little bit. If you're still here, hit that like button. You might as well get your 15 stocks from Moomoo yet as well if you haven't done so already. Use that link down below, deposit at least $100, and you get 15 stocks each up to $2,000, and it also helps out the channel. I appreciate you guys as always. Cheers. So let's get moving here. Microsoft, let's talk about this a little bit. They report, guess what? At the end of this month, you got it right. On the 25th of October, guys, their EPS is looking to come in at about $2.32 on revenue of $49.9 billion. And Microsoft is down a good chunk here. Let's see, from 350, now it's at 230, and it's down officially about 33%. And look at where it's at technically. This is a big spot for the bulls here on the 3-year 180 SMA. Look at that. This held during the COVID crash when Microsoft hit $130. You guys see that? And that's where we are right now. And we pretty much took the lows out from June this past week, or I believe the week before. This thing is poised, in my opinion, for a relief rally. I'm going to say it. I think this, if it gets down, sure, we might see the markets come down a little bit more, like I said earlier in this video, but we are in due for a little snapback here. I think Microsoft, if it gets down 225, 230, and then it makes a sharp move back up to the mid 200s, higher 200s, I would not be surprised. So keep your eyes on that. We also have some other ones, 5 more stocks for the video, guys. So make sure you all stick on throughout the end here. Netflix is also this month. You thought we were done there? You're wrong. We have Netflix this month, guys. And they actually report before all those guys that I just mentioned, all the big 5 tech names. They report on the 18th, and they're looking to do EPS of $2.12 on revenue of $7.85 billion, which is only up 5%. So the days of Netflix growing rapidly, at least for now, those days are gone, guys, and the stock has reflected it. Look at this. The stock has reflected that heavily because about a year and some change ago, when was that? Yeah, just 1 year ago. I mean, could you imagine buying Netflix at $700? Somebody bought it at $700. There's somebody out there that did. Now it's at $230. I mean, this is reflected in the stock price 100%, and maybe Netflix is down more than Meta, or it's probably right around the same, 65%, 65%. So, yeah, I mean, this is one that, I don't know. I'm personally not buying it. I'm staying away from Netflix. I love the product. I think it's great, but I don't want to own it as an investment. I could be wrong. Who knows? I might look like an idiot 5 years from now, but I'm not buying it. And that's as a long-term investment, by the way, but as a trade, I would consider it. If this takes out 250, I'll put my alert there right now. We might get a move to the upside, maybe 275 technically. That makes sense here on Netflix. So another stock here, which I'm sure a lot of you guys like their food, it's Chipotle Mexican Grill. They report this month on the, 23rd or 4th? 25th after the bell, we got Chipotle, and they are down a lot in the past week or two, couple weeks. They're down 15% from $1,750 to $1,500, and on Friday alone, this stock went down about 2.6%. So their EPS estimate is about $9.15, so they're profitable, guys. They make a ton of money, and revenue, $2.23 billion. So not too bad on the top line. I'm not sure how that compares to last year. I have to double check, but I wouldn't be surprised if they're growing pretty decently year over year. So yeah, I'm watching it, guys. I'm watching it here at about $1,500 as a trade. If we hold above the 180 SMA, which as of now we are, and we're pretty oversold, if we get some sort of pop here, we might be going to 16, maybe 1650, at least towards that level. and we could catch it as a trade. But if it breaks trend, which would not be good, but if it breaks trend, starts going 1450, 1400, that would not be good, in my opinion. That would not be good at all. So we also have JP Morgan this month and a bunch of other banks. We have Wells Fargo, Bank of America, Morgan Stanley, Goldman Sachs. And don't worry, we're not going to talk about all those banks in this video, but I do want to cover JP Morgan very quickly, which as of now just hit a low, about $104 a share. And I think it bottomed at about $80, $90 during the pandemic. Yeah, about $80, $76 during that COVID crash. If we get near that point, guys, I'm not a big bank guy in terms of investing in banks, but I might have to consider it. If it gets to 80, 85, 90 bucks as a pure, bank play, which I think JP Morgan is the best bank out there, this would be one at about 80, 90 bucks that I'd be heavily considering. So the EPS estimate's $2.92, and their revenue's looking to be about $32 billion, which is up a respectable, that would be up about 8% year over year. Not too bad, guys. So JP Morgan is very beaten down. We're talking down about 50, 60%, not 60%. I'm overblowing it. 40%, which is still a lot. I mean, that's a lot for JP Morgan. And it's getting to a point where it could be opening up as a value, depending on what you consider a value is, of course. That's there's not only one way to value something, guys. You probably know that, right? So Ford, let's talk about that. Ford's also this month, which lo and behold is getting back near my price target. And my price target is right around, where I'd consider start buying some, $8, $9, $10-ish dollars. I know it's a big range, but that's where I'm really going to start consider buying some. And we got almost to that point a couple months ago, but then it ran at 15, 16, 17 bucks. Now we're getting back to that point. We shall see, guys. We have Ford reporting on the 26th after the bell, and they're looking to do 40 cents EPS on revenue of $36.37 billion. And last but not least, the last stock for the video is Pepsi, which is also this month. They're on the 12th of the month, guys, before the market opens. They're looking to do $1.84 in earnings per share on revenue of $20.7 billion, which would be up about 3% year over year. And Pepsi, I'm not sure if you guys have noticed, but Pepsi and Coca-Cola, well, first of all, Pepsi's chart looks way better than Coca-Cola, but both of these have been demolished. I mean, Coca-Cola's down 15% in the past month and a half. Pepsi's down in the past couple of weeks, probably the same time period, about 10%. And the thing is, the difference is Coke's chart doesn't look that great, but Pepsi's not that bad here. It's actually holding trend right around here. I wouldn't be surprised if buyers came in the low 160s. We'll see how it goes, guys, this month. So we got some honorable mentions. We have Domino's Pizza also this month. We have IBM, Johnson & Johnson, and we also have Procter & Gamble. So when I said there's a lot of earnings, I meant it, guys. We have a ton of earnings this month, and I didn't even cover all of them. There's actually probably double the amount of companies that we just covered that are still, companies worth watching, but the video would be way too dang long. It's already too long as it is. So with that being said, if you enjoyed the video, hit that like button. Feel free to subscribe. Let me know your thoughts in the comments. If you want me to talk about any specific stocks, drop them down below in the comments. And if you haven't gotten your 15 stocks from Moomoo yet or your 12 stocks from Webull, all those are linked down below. Free money, guys. And feel free to check out my Patreon. It's early in the month. Now's the time to check it out. Join it if you want. You could always cancel it. That's linked right down below as well. And with that being said, cheers, guys. I will catch you in the next video. Peace out.